How's it going, everybody? Thank you for watching Resource Talks. Today, we're doing a 2024 metals and junior mining review and potentially a 2025 outlook as well, with a couple of CEOs at the same time. With that being Stephen Stewart of ORECAP Invest, Anthony Moreau of American Eagle Gold Corp, and James Sykes of BASELODE Energy. But of course, there's going to be no overviews and no intros, no interviews, nothing before I've warned you that all three of these companies have paid Resource Talks to conduct, produce, and publish this interview. So you should understand that this channel is a business that makes money from the production and publication of content in various forms, including this interview, which means that at a certain point in the future, companies that are referenced in here, featured in here, might become a client and compensate us for content production. All in all, to say you cannot rely on this video for research, and you should treat this as entertainment instead of as independent research. The fact that this company is being interviewed, or these three companies are being interviewed, that doesn't mean they're necessarily a good company or anything like that. I'm not here to endorse nor attack anyone. I'm simply here to ask questions. If you find that I've failed in asking a question that you would have liked to hear an answer to, which will happen as I am not an experienced interviewer, please let me know, and I will try to correct that mistake. You should also be aware that the mineral exploration, development, and mining industry is a very, very tough business. Losing money is the norm and should be the expectation in this sector. This is a very complex sector, and the performance of individual companies typically depends on really a lot of different factors, a lot of moving particles, including geopolitics, commodity prices, macroeconomics, and many other, really a lot of moving particles, most of which I don't understand. Most people don't. Moreover, these companies are typically in the pre-revenue stage, which means that they rely on the public markets for financing of their operation. As a general rule of thumb, you'd be better off understanding that really most company communications online, albeit this interview or their website, their presentation, their social media accounts, and everything that these companies do is intended as marketing, therefore. And although I don't make buy or sell recommendations because there is a clear conflict of interest given the nature of this business, many out there will do exactly that. And you should be aware of that inherent bias. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in multiple ways, because there will always be a bias, again, albeit well disclosed or not. I have multiple biases with the companies that you're going to hear from and about in this interview. I personally own shares of Awali Resources, which I think we're going to touch upon. I own shares of Baselode Energy, which we're going to touch upon. And I own shares of QC Copper and Gold, now renamed XXIX, which we're going to touch upon. And I have further business relationships with these people. I have a business relationship with Stephen Stewart that goes beyond his companies. And there's a lot of biases that you should be aware of. The fact that I have no idea what I'm doing, though, should already be clear to you at this point. I don't have a long enough track record of consistent investment returns, so I should not, under no circumstances, should I be considered an authority on anything that we're going to discuss here. Although this may sound amusing to you, it is not intended as a joke, and I am not pretending to be humble or anything like that. I am pointing out a fact and warning you not to rely on anything said in this video. Unfortunately, at least to my understanding, nobody out there has any special abilities. The guests who are likely here as part of their marketing campaign, again, they don't possess any superior knowledge, and they cannot know what will go up, what's going to go down, or what's going to go in circles. And none of us know whether any of the company's activities will result in a success. Again, given that we're talking about high-risk activities here. Also, unfortunately, try as I may, I'm not always going to catch all red flags or all challenges or anything like that. So if I end up asking a few tough questions, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving particles, and I cannot guarantee the quality of anything presented in this video. All of this is to say that you should not blindly trust me or anybody on the internet for that matter, and you should do your own research. I understand this is a long disclaimer, but it is important because no guarantees can be made about future events, and past performance is not a guarantee of future returns. What you will find a lot of in here, though, are forward-looking statements. Pause the screen right now and read the warning that you see in order to better understand what those are, because it is important. And this is a conversation that is general and impersonal in nature, containing hopes for future events that may or may not take place, again, depending on many different factors. Before continuing on, please talk to a professionally licensed investment advisor with a good long-term track record, as well as do more research before taking any decisions. And research is not done on YouTube or Twitter. It is done on setterplus.ca. That's where you'll find the company's official filings. And if you don't do that, you're highly likely to lose your money. If you didn't have enough time to read the disclaimer shown on the screen as I was talking, or if you don't understand them, you should not be consuming this content because you might be putting your capital at risk. With that all made clear, I can actually kick off this interview with, as I was saying, Stephen Stewart, Anthony Moreau, and James Sykes. And gentlemen, there's a lot to go through today, but I want to start off high level, and this may be a little bit cheesy, but starting with you, Stephen, maybe looking back at 2024, if you could only use one word to sum up the year for the junior mining sector as a whole, or metals and mining, what will that word be and why?
Fantastic, which is probably counter to what most people feel about it. You know, from a market standpoint, from a share price perspective, it's been atrocious. One of the worst in memories. But when you're in my seat, I think about assets. So I'm not buying stocks necessarily, I'm buying assets. It's been a wonderful opportunity for people who have a long-term view to acquire assets. So there's opportunities to make money in good markets, and there's certainly opportunities to make money in bad markets. I believe fundamentally you make most of your money on the buy. And so we have been very busy evaluating and looking to acquire and executing on the acquisition of assets. Now, that same can be said about shares. So look, if you have a long-term view and you are patient and you believe in the industry like I do, it's a fantastic time. Everything's on sale.
There's something we can touch upon there, maybe toward the latter part, because your respective stocks have not all done well, to put it mildly. So that's something worth talking about. But I understand where you're coming from, saying if you have a long-term view, maybe this is a time to be buying. Tony, what would you say? Is that something you agree with? How would you describe the year in one word?
Well, I use 7 words. What have you done for me lately? I think, the market, it's a fast money market. I think, if you talked to me 2 years ago, you said gold was going to be $2,700 on average for the year. I think a lot of these gold stocks would have probably doubled, but the traders, the market, they're just so hungry for more and more gains. And I guess you're being benchmarked to the, general market that just seems to never stop going up. That I think a lot of these stocks are really undervalued, and it reflects a lot in the juniors. So if you got these majors and these mid tiers that are being valued where they are with $2,700 gold, which is very undervalued, it's hard to get the proper valuation for these quote unquote growth stocks that are junior companies. So it's a tough market for the juniors. And I think the same way, what have you done for me lately on the macro level for, the gold price and the copper price? I think it's the same thing for results. I think a lot of people are investing in this space, understand the capital side of it, don't quite understand the geology side of it, and they're a little bit naive thinking that a lot of results and price action has to be linear. So gold price has to, go up $50 every month. And, if you got great results, you got to have better results after that. And it's just not really kind of how the world works, but it's how we have to navigate the business that we're currently in. I come back to what Steve says. It's a great opportunity for companies that have a good balance sheet or leaders like Steven that are able to raise money and take advantage of some of these undervalued assets. So it's a good opportunity. Eventually the tide will turn, and we'll get to an inflection point where there is a lot of value and you see the money coming into the majors, which flow down to the mid tiers, which then flow down to, the junior companies like us. Because in the end, we are the growth. We're the minor leagues for the major copper companies, the major gold companies, to give them that growth. But I think right now a lot of these companies are undervalued, and we got to figure out how to do it.
Again, multiple things we're going to touch upon in the conversation there, Tony. James, what about you? This year has not been easy on you and the company. And again, we're either going to have to schedule a separate barbecue and talk about that there, or talk about it toward the end of this conversation. But keeping that in mind, how would you describe this? How would you describe 2024?
I'll look at it from the uranium and nuclear point of view, but I would say misunderstood. And I think that the nuclear outlook is absolutely fantastic. The growth behind what we're seeing in the East, Japan bringing on new reactors, Middle East, Europe, everyone's pumping out new reactors, and that's just going to lead to more demand. And that's definitely foreseeable in the future. And I think there's that market disconnect that doesn't really see or appreciate that long-term view as well, which leads to almost could lead to security of supply if we keep seeing this East versus West. And that's going to become very important, especially being within Canada and having neighbors to the south like the States. I think security of supply is going to be very important for a long-term outlook. Yes, the price of uranium was hot this year. Up January, we were spot prices over $100, but then it's come down to about 75 as of late. Still up from a decade ago by quite a bit, but also point to what I would consider to be a little bit more of a leading indicator than spot prices, the SWU prices, secondary work units. Mm-hmm. Those are extremely, let's say, flying, to use that word. But the SWU prices are performing better than the spot prices. And this is a better indicator of the health of the nuclear market, which is very encouraging because, again, that's not only with the energy. Well, we've got global energy supply or global energy crises that we're seeing everywhere, and so we're going to need to secure that supply. And with everyone looking to nuclear, yeah, I think that the uranium and nuclear market's completely misunderstood.
I agree.
I wish the junior market again agree with that bullish narrative that you're giving here about uranium, because that's not being the case. And again, we'll touch upon that maybe later on. But as always, as the rain of sunshine that I am, I'd like to start by maybe discussing some of the issues facing the junior mining space today as a whole, because maybe there is something structurally wrong with this market. Again, just gold is up, copper's up, uranium's up. The juniors not so much. Some of them are flat, some of them are down. So let's maybe start with that. Stephen, what do you think is the biggest issue or challenge with the juniors mining space? Is it broken? What's happening?
I don't know if we have enough time, Antonio, but I mean, look, there's typically a sector lag. We see it every cycle when physical metals run, which they have. They're very strong for the most part. Takes a while for it to trickle down. It goes to Barrick, then it goes to Alamos, then it goes to the big juniors and so on and so forth. So now that said, the sector lag has been protracted longer than anybody anticipated. So it's not entirely unusual, and it's possible that this year could be a bit of a violent rebound. We'll see. But beyond that, I think there are structural issues with the industry, the exploration development industry, and that's delivering. I think if I could say the single biggest problem that the industry has, it's the time frames. It's the ability to deliver metal from the time frame from when you discover it. It's 20, 30 years here in Canada. That's a structural problem. That has to change. You go to places like West Africa, things get dramatically reduced, and so capital flows there. So I think if the West, and that's not just Canada, but I am picking on Canada, the West, the United States, Australia, call it the big three traditional safe resource jurisdictions want to be taken seriously again in terms of capital flows. They better get their act together in terms of permitting. And I think if we could actually, because it all comes down to the ability, going back to the Lassonde curve, you make the discovery and then you get your 10 bagger, and then it's 10, 15 years of ups and downs and trying to get permits and access to capital, and meanwhile your average shareholder is there just sort of gets exhausted and tired and hasn't made money. So if we can condense that like it used to be, or like it is in in countries, certain countries elsewhere around the world, though that's getting fewer and farther between, then we can start to make money again. I mean, that's ultimately what it's all about. So people don't have trust that you're going to be able to put this into production less than 20, 30 years. They're not really investing. On top of that, Canada has sort of made itself more complicated or less of a destination to invest in because of foreign investment. And so, keeping call it the Chinese money out now, not that I'm an advocate of handing away resources to China, I'm not, but I'm absolutely not in favor of the government preventing foreign governments from investing in our resources, or our companies that do. That's part of the theme. We're seeing companies exit Canada and the regulatory regime and the exchanges entirely. I think that's terrible to see that. Instead of keeping foreign governments out or foreign investments in, how about we incent, call it Western, domestic capital to invest? Let's totally take a different approach, a proactive approach, which we can get into later. But look, I think those are part of the reasons. I think and there's an opportunity, and so I'll bring this back to Canada, which I'm so passionate about. Is that I think Canada in and of itself is now become a counter-cyclical bet. And that's how we've always invested in the mining. When you buy uranium when it's $19, you buy gold when it's 1,000, and you position yourself. And I think that's what we at the OR Group and all of the guys here are all Canada-focused projects. Canada is going to come back. We have no choice. And I think the biggest overarching theme of 2024 was one name down to the south, and that's Trump. And just sort of the potential that he brings. Now, I don't think he's some sort of panacea, and I do think there'll be a honeymoon phase, and I don't think it'll be linear. However, what I do believe is that it's sort of the beginning of, call it, back to rationality in many respects, back to productivity. Let's get things done as opposed to just trying to please everybody, which goes nowhere fast. So I do think that we may be forced to be productive again. So there's lots of politicking going on, but it's nice to see for all the politics involved. It's nice to see us talking about building roads, bridges, shortening permits and stuff. So I think maybe that's the spark that really solidifies our long-term counter-cyclical bet on Canada, because we have endowments like no other. And just to one final point, I mean, I travel the world. I'm fortunate enough to do that. And there's some of these places I've been to that were swamps and deserts not more than 40 years ago, that have built infrastructure and housing and civilizations that, frankly, I'm envious of when I see these places. And they have the painful part is they have nothing that Canada doesn't have. In fact, Canada has more of it, but we just haven't been managing our resources effectively. Think how wealthy we could be and what we could do if we took our oil and gas, yes, oil and gas, and our metals industries seriously again.
That is, again, a lot of things. So Canada, West Africa, Mexico, that's something I want to talk about actually at a later point. But isn't part of the issue with the industry, or isn't part of the responsibility in the industry also up to you guys? I mean, you as executives, and maybe not you three specifically, but the management of the junior mining space as a whole, isn't it up to you to also deliver better results? Isn't that part of the issue? Tony, you can pick it up, or Stephen, you can keep talking if you wanted to.
Tough. I think one of the issues is the investors are fragmented. You got to split between people that want near-term results right away, and then you got your long-term investors, and that's us running the company. We're all stakeholders. We're trying to run the business, so it's hard to have 5 rigs and also have money in 5 years. So you're trying to manage both sides. I was just talking to an investor, we wish we could please the short-term and the long-term shareholders, but in the end, you got to run your business like you're a long-term business. So, and then it brings up another big issue. It's the volatility. It's the volatility of these stocks. It's a volatility that keeps some of these investors in that fall into investing. You get your first 10x in the mining business, like I did with Weda Bay in the early 2000s. You never leave, but it's the volatility watching it from the outside that you're afraid to even get in. And I was talking to a really big broker in Toronto. We had lunch together, and our stock is up 400% now, mark to market on the year. But on that particular day, it was down 10%. And he's like, this is insane. Like the whips. And he goes, if IBM was down 2% on a day, that'd be a really bad day. So for a lot of the money, especially from Toronto, where you're not run by Canaccord and Haywood, you're run by RBC and TD, a lot of these investors aren't allowed in. So you don't have that capital to kind of support these, short-term fluctuations and downwards pressure on the stock. And in the end, it keeps the money from coming in and, creates less demand for your supply, which, obviously causes a bit of downwards pressure. I think it's scary as an investor looking at a lot of these other companies. You may have your cash to drill for the year, but what are you going to do after that? And even with, pretty good results, they're not good enough. You need spectacular results. And if not, you're going to sell off because the market knows you're going to do a raise. So there are a lot of challenges, and you got to make sure, I think, that you have the right project, you spend that money wisely, and you deliver on the marketing side your message. And you got to get that stock up, because if you're not, you're kind of dead in the water. Obviously, again, we're lucky where we are, but it's challenging for the industry. And quite frankly, I think a lot of those people are afraid of those losses. I always think like the certain part of your portfolio should be put towards risky investments, whether that's 3%, 5%, 10%. And you got to realize you put your money, let's say, in 3 different junior stocks. 2 of them, you might lose all your money in, but one of them will be a 10x. So that will triple your overall investment in that quote unquote risky portfolio. So, I think we got to educate people about the risks that there are to invest and make sure that they know, my job as a CEO is it's like finding a needle in the haystack for some of these juniors finding a mine and getting an exit. We're making that haystack as small as possible at American Eagle Gold, and we want to make sure that needle's as big as possible. And that's all we really can do. And we got to market that and get people to buy our stock. But there's a lot of challenges, obviously. And I think the big one's capital.
I've actually had a different experience. Took me a while before I actually had a stock do well, and that's something we'll also talk about later on. But it is
You
a
always
high
remember your
risk sector,
first. Continental Gold.
Well, Antonio, let me push back on you. You said that we need to deliver better results. I mean, how do we do that? I mean, it's not like, let me defend the industry. It's not like we're holding back. We're trying to give the best results we possibly can within the means we have. This game is not easy. Discovery is hard and rare. True discovery is exceptionally rare, and within a very unforgiving market where capital is constrained. I think the market, our industry is doing the best it can. And I think there's a segment of it that does a phenomenal job at it. There's obviously those in like any industry who do less of a phenomenal job. But it's not like we don't want to deliver 300 meters at 3%. I'd do it every single hole if we could. But so Tony touched upon the expectations, the volatility, the what's the right word? Almost, it's not quite capitulation, but like the disbelief and the exodus of capital. And so there's just such a doom and gloom. And so if you don't over deliver, you're punished. And so I'm not sure. I mean, look, one could say that's the collective responsibility of the executives like us here in under delivering. But look, I'm gonna push back and say, look, I think we deliver. I think but Mother Nature is a tricky lady, and so you need to understand the risks and read the forward-looking statements and the disclosures that we are. Talk about exhaustively in all of our material. But the bottom line is you need patience. And honestly, I think that just speaks to the individuals.
I think one of the issues, touching on what Steve's saying, is people have such a short attention span. Nobody wants to do their own homework. And they just see red on the screen and they think, stock's down because it wasn't a good result. But there's a lot of other things in the background which create something like baseload to be a good opportunity. Again, the ETF selling. So it's not really a reflection of how the company is doing, but more of this macro market stuff that's going on. And people just don't care and they don't do the research, and then they'll just sell it as soon as they can. So, we see the same thing probably to a lesser degree to American Eagle, but people just look at the screen, and the traders know that. They know it, sell it down. They play on the heuristic behavior of some of these investors, and it kind of creates a bit of contagion. But there's a lot of opportunities. But again, like if you're looking at if you're in the junior mining industry and you're investing, like, look who's a leader, make sure that they've made a discovery before, like James Sykes and Charlie Gregg. Do those guys have cash? American Eagle, Baselode both have cash, and are they in a safe jurisdiction? Because if you're lucky to find that deposit, can you keep it? And you know, for all the pluses and minuses Canada has, I know eventually if you got a good project, it will get in development, albeit 2 or 3 years later. But you might be faster out in South America. But what's the geopolitical regime going to be in 5 years in Argentina and Chile? I don't know. Is that mine going to be taken away from you? A lot better chance than taken away in Canada. So that's how I kind of look at things. I think it's a great opportunity. And then, another downside to the industry too, we're talking about leaders with all this stuff going on. What young leaders are really getting into the industry to run these companies? It's hard to find really good people to work for us. Like Steve and I have tried to find people, tried to poach people, and quite frankly, they'd rather work at Accenture or the big banks, get their benefits, work 9 to 5 than, take a risk to get rich. They just want something that's safe. And it's really hard to find those great leaders. And we have a lot of them at OR Group, luckily. But, most of the industry, they're run by gray hairs that have, a habit of not delivering on their companies. And I think those are kind of the companies that I would avoid.
No
Yeah, I'll
risk.
touch on a couple of that too.
Okay.
Just to reiterate what Stephen was talking about too earlier about the length that it takes for junior mining companies or just any project to go into development, but also this narrative of short attention spans on the investment space. And it's the way I've seen it. I've had a lot of exposure to oil and gas investors, as bizarre as that is. Maybe that's just Saskatchewan's proximity to Alberta, but they have a different mentality, and they always have. Because in the oil and gas industry, you go from discovery into production within 0 to 6 months, and you have that immediate return. And that's what there's that mentality of investment. And I think we've seen some new things in the investment world, like cryptocurrencies, which have offered a lot of big returns very quickly. A lot of, the opposite is also true. And my perspective is just there's a lot of investors, especially young investors, who sees that as a golden opportunity and really getting into the idea that, oh, we can make it rich within 0 to 6 months. And so a long-term strategy doesn't really fit their bill.
Let's face it though, the fact that these things are so crazy, and it's not for the faint of heart running these companies. And if it was super easy, it wouldn't be as fun. And there's a lot of challenges. And just when you think you have everything right, even like at our company, like there's more challenges ahead. So it keeps us in the business. It keeps us young, keeps us busy. And my uncle said you get to travel the world, see the world, help the world. But in the end, you're always putting out fires. You're working with great people and you love your job. So it doesn't matter how challenging things are. It doesn't feel like work and you work with great people. So I think we just got to understand the challenges that we have, overcome them, and make the best use of them and, create shareholder value.
How do you solve those? And where I'm coming from with this in the first place, where I asked, like, isn't it your guys' responsibility is something that Rick Rule always tells me, and that's that the junior market as a whole is actually overfunded. It's not underfunded. Maybe on a per company basis, sometimes it is in some occasions, but as a whole, given how many companies we have, and if you stack up, if you chart the G&A of the space as a whole, you take all the companies and put them into one company. And then you track that G&A, for example, over the last 20 years, that's gone up while the economic discoveries that have been made have been stagnant. So that's where essentially that pushback comes from. Isn't it I'm part of this industry too, our responsibility to do better as an industry? That's where that's coming from. But what could be the solution to those challenges that you guys bring up? I mean, Stephen, you bring up
enforcement of regulations, perhaps. I mean, look, I'm not the industry's policeman, but there are regulations in place, and I think the ability to run a junior mining company, one that is publicly traded, is a very powerful tool, and one that can attract all types and does. Effectively, we are a little, to quote Rick Rule, since we're in that doing that right now, we're little central banks. And so I can print paper and sell it to the next guy in exchange for their cash. That is power, and as I said, it does attract the wrong types. However, I can't speak for the next guy who does that. I think we at our group very clearly we take that responsibility very seriously. We treat it shareholder money as if it's our own. However, if there are people who are abusing that, and there's many ways to abuse it. And there are many rules and regulations. What I don't think they're really doing all that well is enforcing them. It's sort of like what's going on in, the neighborhoods around Toronto and the jewelry shops at the malls, right? So people are coming in, smashing and grabbing because you know why? Because they're not worried about the consequences. And so I think, without going down the rabbit hole and throwing regulators under the bus, but I do think that Canada is known for not enforcing some of the securities laws that are infringed upon. So I think stepping that up could be serious. Like when you look at the SEC, they do not mess around down there. If you break the law and you call it abuse this power to print paper in exchange for money, you're going to jail. Whereas that's not necessarily the case here in Canada. So I think, does that solve our problems? No. But I do think there is a loss of confidence in the industry as a whole. It's not just our ability to find the deposit. It's not just our ability to permit and put it into production, which we discussed as a multi-decade situation, but it's also our ability to dissuade and discourage those who abuse the powers that we are given. So, I mean, I think there's lots of things we could do. There's lots of ideas if I had the power and the time and the desire to do it, but more importantly, the authority, which I don't, nor do I want. But there's lots of really great, simple ideas that could be implemented to bring confidence back to our industry, and then use it as an opportunity to make Canada the world's best place to do business in the metals business. I really do fundamentally believe we have the people. We have who are skilled and knowledgeable, the capital markets, the Toronto Stock Exchange, and by extension, the Canadian Securities Exchange. We're incorporated, solely to finance the metal industry. And then, of course, none of it's possible without our absolutely incredible endowment of mineral riches that are beneath our feet. And aside from the fur trade, we're probably the one single most economic thing that developed our country to where it is. So look, I think we have all the pieces. We have all the pieces there. We just got we need to put them together and make better use of them.
Hey, Antonio, I like what you mentioned about the G&A, and let me give an example of the org group. And look, obviously we're selling our own book; that's our job. But if you're investing in a company that is paying their CEO a real salary and their CFO and other people real salaries, and you don't have much money on the books, like I would never invest in those companies. Like org group, I'll tell you what, this is the secret, and you can tell every other junior that's paying their CFOs a full amount. It is not a full-time job being a CFO for a junior company. We have one CFO covering 7 different companies within the group, and that saves us real money. And my mom always say, look after your pennies, nickels, look after themselves. And, by being part of the org group, we probably save around $500,000 a year. And if I wasn't part of the org group as American Eagle Gold, we probably would have stopped our drill program on hole 16 last year and not hit 17, which allowed us to get to 80 cents, which allowed us to raise another $8 million, which then allowed us to bring South 32 in. So, we really do look after the bottom line. And, those $20,000, $40,000 is the difference from possibly drilling a 700-meter hole versus an 800-meter hole and actually making that big discovery. So, you got to fight tooth and nail for your cash, and you got to stick with the group that really looks after the G&A and look at any of our G&As at the org group. It's amongst the lowest in the industry. And I appreciate Rick Rule's macro hyperbole. But in the end, everyone's kind of propping up their own book, and Rick's no different. So the org group's doing a really good job, and just got to put the drills in the ground. That's the only way to get sustainable growth in this industry.
Yeah, totally. Look, I totally agree. There's unit savings, but that's not the raison d'etre for the org group. It's the ability to attract high quality people. I think that's what it's all about. Our next CEO, when they come in, they see our group and our successes bleed over, and it allows us to attract more capital and higher quality people. Again, going back to the challenge of finding high quality people.
Going back to what you said, though, Stephen, there for a second, bring confidence back into the space as a whole. Do you guys think M&A might be part of that solution? Like, would more money coming from larger companies to, quote unquote, save the space? And in general, do you expect to see more M&A in 2025?
I certainly hope so. I mean, M&A is a part of this business. It's impossible for the likes of Newmont to find 6 or 7 million ounces of gold a year to replace that which they produce. This industry is built upon M&A. I'm surprised that M&A, though we've certainly seen it, I'm surprised we haven't seen more of it. Hopefully, we see a lot more in 2025. I think a lot of these companies, and I wish these mining companies were far more aggressive. I think they're kicking themselves. They should have been super aggressive 2 years ago when things were, super dirt cheap and acquired over, there's companies like, IM Gold is a wonderful company. And as they had the Cote Lake project, which both Tony and I have history with, struggled and could have been, IM Gold could have been bought for, $1.50. Now, I don't know, Tony, what's IM Gold at,
That's 750. I don't think they would have sold $1.50.
Well, no, they would have. What if they offered 100% premium? The point I'm making is that there's a lot of suitors out there for the Cote Lake project. That's 400,000 ounces in a top tier jurisdiction that's going to be producing gold for 30, maybe 40, 50 years. The big boys can't afford not to own that. So the question is, who's going to buy it? And they should have. And while it did have its troubles in getting up to production, that's now, I believe, it's at commercial production. And they could have had it for a fraction of the price. And so I think that the point I'm getting is that they need to act now. They should have acted 2 years ago. FOMO was going to come back, and that's why they haven't been acting, is because they're all susceptible to groupthink. And there's been no reason to act. They sit back and wait, allow it to be de-risked, which again is something that the major mining companies are looking at the juniors now. They don't want to buy anything that isn't fully understood and permitted. Well, that's nice, but that puts all the risk back on the junior mining companies. But the second that momentum shifts and the big boys start to buy again, on the weekend they'll announce a deal on a Friday, and then Monday morning all the other mining companies get in the boardroom and think, oh geez, we missed that one now. Where do we go next? And so that's where we need to go. That's where we will go. It's just a function of time.
It's not even about the big boys coming in and taking out the juniors, but we're also seeing the OEMs coming in and investing in projects and companies as well. And that's really kind of unprecedented, but I think that still demonstrates the idea that the OEMs want the product, and that's big leverage.
Explain that, James.
OEM manufacturers.
But explain some examples.
I think Samsung, and we're seeing some of those investments.
Yeah, we're seeing some of the lithium companies, Tesla making investments, nickel battery manufacturers making investments into nickel projects. May not always be out here in the West. There are a few examples in the West. Ontario, Ontario building lithium plants before we even have, or the whole lithium supply chain, investing into that side of the mining space.
Volkswagen just came into lithium company that shall be unnamed, but they bought 9.9. So you're absolutely right, James. That's something that we haven't seen in a long time. There's history of it, but not in this cycle, that's for sure.
Well, think about this. It's not. Canada's different than the US, though. I think a lot of these companies, they follow these certain rules. There's no hostile takeovers. And I'll tell you exactly what happens when a company's going to be taken over. No company, for the most part, Agnico, Kinross, they're not going to take out IM Gold until IM Gold starts a process, lets everyone in the data room to get their information. Agnico and Kinross isn't going to buy IM Gold until they actually understand everything under the kimono. So you got that process, and by that time that happens, all the banks are going to know about it. The stock will start moving, which takes away some of that upside. So that's one of the issues. These guys the big companies would rather buy you being completely de-risked. They'd rather buy you, for example, for American Eagle, they'd rather buy you for $1 billion being de-risked than $100 million and taking a punt. Because the big issue right now, specifically in gold, isn't the cash, it's the people. And they don't want to be putting all their people towards some project that's not completely, de-risked. So I think that's one of the main issues right now. We follow these certain rules, and it takes away the M&A, which takes away, some of the upside.
Well, it's risk aversion, and it has to do with the boards and being so risk adverse. But it has to be about groupthink, and it has to be about. I still think everybody is still in that mind frame of the cycle from 12 years ago, when in the last quartile of that last cycle, there was a lot of poor decisions, certainly with the benefit of 2020 hindsight, and everybody got fired, right? And so all the CEOs who are the next generation of CEOs are terrified of that. However, one could argue that those days are behind us, or at least that cycle is long gone, and we're in the early days. I believe we're in the early days of that new cycle where a completely different attitude and certainly tolerance for risk needs to be adopted. Whereas I do think things are cheap, not expensive. But the boards are still caught up in that. But that can change on a dime when they feel like they're going to be left out. Now it's so easy. I was just talking about this with a guy, but these funds and by extension the board members, they don't mind being wrong as long as everybody else is wrong. You know what I mean? So to go out there and be an outlier is a risk. But the second you got an outlier, you have a leader, go out there and be aggressive, then the whole sentiment and attitude changes. So we need that outlier to break out, start making some moves. I go back and somebody I've always looked up to in this industry was Peter Monk. And Tony, you talk about no hostiles. Peter would laugh at that. I mean, he did hostile takeovers for breakfast, and so that's the type of mentality that we need to bring back in this industry that has leaders, builds leaders. Now that can come back and bite you in the butt, on the back half of the cycle, but on the front half, that's how major mining companies are built.
If you're talking about M&A, like I think for M&A, if you're looking at the gold industry, it's completely different than copper. Gold industry is going to be mid-tiers because the gold's so high right now and these mid-tiers are so undervalued. The Barricks, the Kinross, the Agnico Eagles, they're going to buy the mid-tiers. So if they're buying a company, using up, diluting, they'll get cash right away, out of those mines. But I think it's the complete opposite for the copper. I think the copper has to buy, those future growth stories, like the American Eagles, etc., because there are no mines coming into development that are massive that these, big majors want. So it's two completely, different things altogether. So yeah, it's going to be the Wild West, I think, in 2025, 2026. Now, no, speaking about something else, I want to touch on something that's really interesting. There's not a lot of these mining companies out there. And if you look at the board, look at their, information circular, these board members are making $230,000 to $300,000 a year for pretty much having 6 to 12 meetings. Do they really want those companies to sell if they can't collect those nice, easy board checks? So they're not really aligned with shareholders. And the same thing's true for management. And, if you're management, at least it's a little bit different than the board. You're management, you're probably making $2 million minimum as a CEO of a mid-tier to major company, and you're getting 3 times pay if you get bought out. But at the same time, the board members are not getting any kind of trigger. They leave, they don't get paid any more money. But if you're looking at the CEO, the more you buy out these companies, the less companies there are to work at to make that money. So where do you have to go? So you're actually more incentivized to keep your company rolling, not have M&A, and kind of stay with the status quo. So there's a lot of things working against a lot of these Canadian miners to keep themselves from being bought out, which takes away a lot of that light at the end of the tunnel and upwards momentum.
That's a very good point on board members and where the incentive lies, as well as change of control fees and stuff like that. It is making me think about the last cycle where arguably, I don't remember if I could speak during the last cycle, but I probably had just learned how to talk. And so I'm not one to talk about it now, but as far as I understand it, there was a lot of bad decisions taken, and mostly because it was greed driving M&A. And so I'm thinking, what is going to drive this next wave of M&A? Is it fear? Is it greed? Is it long-term strategy that is going to dominate M&A decision-making in 2025? And overall, what does that tell us about the current state of the industry as a whole?
It's stability in the price of gold. I think the last time we saw that really big run from 2005 to 2011, people never thought it would end. And you saw obviously the purchase of Redback got purchased by Kinross, obviously not a great one. Barrick purchased Equinox, but they thought the price was going to keep on moving linear, and then all of a sudden it stopped. And from 2011 until 2021, the price of gold averaged 1365. And so a lot of people got hurt, a lot of people got fired, and there's a lot of scars created. And right now we've seen this other run up, but now everyone's all of a sudden afraid that we're going to see another drop in the price. So I think we probably need another year of stability for these big companies to have the courage to actually make these investments and believe that their investments will actually pay back. So I think that's the big thing, is stability in the price. The price doesn't necessarily need to move up much higher; it just needs to stay where it is. So I think time's going to kind of help us figure that out. And I think gold price, given Trump's coming in, inflation, everything else, I'm very bullish on the gold price, even more bullish on the copper price. But copper is a completely different animal. Gold's fragmented, 20, 30 different companies involved in it. The top 80% of production. But if you look at copper, there's 5 companies that run 90% of the production. So it's completely 2 different markets that we have to deal with.
James, what about on the uranium side of things? I mean, the price has done, since I followed it, very well, extremely well, you may say. I mean, there was a spike and a settling down, but still up quite a lot. Still not a lot of M&A. Like Cameco has remained, inactive in the market. Like the biggest players have remained inactive. There's no outside money coming. Like there's no oil money coming into uranium. What's the uranium M&A take?
I think the Paladin acquisition of Fission was just a big one that was recently announced, got approval. So that's a testimony to a producing company seeing value in large assets with the price of uranium, the uranium outlook in general, that long-term vision. We have seen quite a bit of M&A, especially in the basin. Globally, I don't think there has been that much, but basin-wide, we've seen projects with synergies bouncing off each other and trying to make more district-scale opportunities. We've seen companies acquiring other assets that are more long-term strategies, but there's really nothing that's popped up in the short-term strategy game. You're right about Cameco. Nothing really has come out of their end, but I think that could be that their strategy has changed a little bit more. They're happy with their assets. They've got world-class assets, lowest quartile producers amongst all of their Athabasca, ISR, Kazakhstan operations, global leader in what they do. But now they've also gotten into the nuclear build-out space with Westinghouse, so completing that whole supply chain. Do they need to go into mergers and things like that? There is the outlook that with what they're doing and advancing, can they even achieve more than what they have? Sorry, that's not even coming out right. With the nuclear space advancing beyond what is projected, and especially with inclusion of SMRs, and that's one of the things Cameco and Westinghouse are looking into. SMRs are not rolled into the nuclear outlook at the moment. So that whole demand side increases with the future outlook. How fast can those things roll out? 5-10 years, theoretically. If demand continues to increase, what is Cameco's current capacity? And they're not meeting that. But even at full capacity, will they be meeting what they need to do to help supply a aggressively growing market? And I'd like to believe that yeah, they've got room to grow, and they've got room to take on something new to help meet that growing demand. But otherwise it's mergers and acquisitions seem to be the part of the course, exactly as Stephen mentioned earlier. It's always part of the game. You're going to see mergers and acquisitions happen. Sometimes they're good, sometimes they really go nowhere. It's just the nature of the industry, I guess.
From these M&As, transactions, just to sort of reference, we said in Newmont and Newcrest, I think it was probably one of the biggest M&A transactions, certainly in the gold space this year. And then you see divestitures. Okay, so from after that, the digestion process there, they decided they want to focus on core assets, and they're selling off Eleanor, they're selling off Musselwhite and other things. I guess the point I'm trying to make is this is where the next mid-tier and major companies are born from. We don't even know the names of these companies yet. Some of these major mining companies are so big that they can't afford to allocate capital into exploration and whatnot. So Newmont's got untold numbers of world-class deposits on properties that they own that they don't even know that they have. And it's going to take sort of, the forest to be burned down and to be regrown through new capital, new companies, new leadership. So I think, it's just the evolution of the cycle. It's totally normal. That's how this industry has survived and thrived. And I don't think anything is going to be different. It just happens at different time frames at different periods. So look, I think M&A, and I've been saying this forever, but is it's just like it has been governed by the fear trade. Again, everybody is very comfortable with the status quo, but eventually there's going to be a leader is going to emerge, and then everybody's going to follow, and then the greed will overtake, because it always does. We're a capitalist society. So and as James said earlier, we have been overshadowed by the Nvidias of the world and the Bitcoins of the world. I do think some of the reversion to the mean on that side of the industry or of the economy might be required for our spark to come. Metal prices are strong, but if you want to see that reflected in the equities, people can't be making as much money in Bitcoin and Nvidia as they have, because it's tough to compete. So the capital is going to flow there. But again, everything reverts to the mean over a long enough period of time. I think other sectors are very expensive. I think the mining industry is very cheap, and that's on a sort of all else equal macro front. But that's a general statement across the industry. And then within that, it's a very, very inefficient market, specifically on the smaller side of things, going back to, the ability to take 1,000 juniors and filter out the crappy ones quickly. You can do that. So look, there's a huge amount of opportunity. M&A is on the horizon. Inflation's not going anywhere anytime soon. And I'm very optimistic on metals prices. I'm less optimistic on margins. But in the meantime, these companies are printing, I don't want to say printing free cash flow. That might be an oversimplification, but I think as they continue to amount cash on their balance sheet, they themselves become, one, targets, and two, that cash burns a hole in their pocket. So I think change is afoot here. Maybe it's not this year. The only thing I can say for certain is I don't know when it's going to happen. I just know it's going to happen.
Well, I want to talk about some of the other things that we've seen in 2024, but maybe approach it from a different perspective as to what is going to happen in 2025. And I understand neither of you has a functioning crystal ball, although I know we've all tried multiple times. But what is 2025 going to be the year of? What's going to be the biggest topic in each one of the respective sectors? Means Stephen, you can take gold, James, you can take uranium, and Tony, you can take copper. Let's kick it off with uranium, just because I have a bias there.
I think 2025 will be a steadier. I think we will see some higher highs than what we're currently at for the spot, as far as spot price goes. I think that uranium will have a positive year. Macro as a whole, fingers crossed, will have a positive year too. But things just look too rosy for it. Everything points to the fact that uranium is a long-term play. Will we see these skyrocketing highs that we did back in 2005 to 2007? More than likely not. Things look like they're going to be steadily increasing. And that's, again, it's a lot healthier for the market as a whole. But I think that we're going to see a little bit more challenges ahead, but that will turn around very shortly, and I think we'll start to see some additional growth in the space.
Tony, what do you think is going to characterize? And I'm not necessarily asking about the macro. On macro is extremely hard, in my opinion. There's very few people who do it well, and even they don't do it well all the time. But on the junior level, when it comes down to copper and copper juniors, what is 2025 going to be characterized by?
Balance sheet. I think if you don't have cash in your bank to cover your following year after the year you're drilling, like if you're a junior company, like if you're drilling in 2025, you can have a great project, but if you don't have money for 2026, like you're dead in the water. Because the market will know that, and it doesn't matter what your results are, you will get sold off because they'll know a raise is coming. So I think if anything, a lot of these junior copper companies should probably base their exploration program, maybe pare it down a bit, and make sure that they can have the same program the following year, because you have to raise when people don't expect you to raise. There's a lot of companies out there, and I'm looking at companies right now in the junior space, and their balance sheet brings them to like sub $500,000, and the market's not stupid. They don't know geology well, but they know your balance sheet, and they're going to sell you off. So I think that a lot of the focus is going to be being able to do a raise before the drill program starts, which creates a new opportunity to buy, which keeps people from actually coming in because they got to protect themselves for the following year. That's what we did at American Eagle Gold. For the last 2 years, we always made sure we had enough money or forecasted to our investors that we didn't need you. We're funded for the following year. And if we had to do a raise, we did a raise when it wasn't expected. We did a raise right before we started drilling this year. And then we did that raise with South 32 for 29 million bucks. And now we're covered for the next 3 years. But I don't think I'd invest in any company that didn't have enough funds to drill for the following year, because not that I don't believe in it, but I just know there's going to be another downwards pressure on their stock because they will have to do that raise.
Yeah, it's well said. That's one of the things that I pay very close attention to. Stephen, gold. I know you like gold. What do you think is going to?
Well, I do. I like uranium. I like copper, but thank you for giving me gold. I could have spoken all of them, but gold is my first love in the metals industry, and for good reason. And to me, gold is just a proxy for risk or trust. Maybe that's a better way of saying it. It's trust. And I think society as a whole has lost trust in the system. There's a lot of talk of disinformation or fake news. Trump versus Kamala, it's just given rise to distrust and what we're hearing. And I think you can extrapolate that all the way down to the fiat currency. And which is a well-beaten story for the gold bugs, right? But I think and that's a niche. That's a very small niche. But if the essence of that story could be extrapolated or taken upon by society at large, which has happened time and time again, and throughout history, if you're a student of history. But if the world could appreciate gold's value and gold's function, and that gold is in fact money, perhaps the only true form of money, it could be very, very powerful. So I do think that there is a growing, and I guess the biggest competing aspect right now is Bitcoin. I mean, that's what everybody's saying is Bitcoin replacing gold? And I'm just going to say absolutely not. I'm not a buyer of Bitcoin. I should have bought it at $10,000. I would have made a great money. I'm not against Bitcoin. I think it's been a fantastic speculative investment, but it's a speculative investment, and make no mistake about it, it is no replacement for gold. It's a proxy for gold. It sort of mimics a lot of the things, but it does not have that 5,000 years worth of history, the tangibility of it, and so on and so forth. So look, I just think, going back to my point, I think people are skeptical about almost everything right now. There's argument whether there's aliens, up there flying around New Jersey now. So just all this craziness and distrust in some weird way trickles down to gold. They're selling it at Costco now. So I think there's lots of signs of it just being more pervasive throughout society. And as I said earlier, I do not believe that they've got inflation under control. The central bankers know that they certainly do not have it. It looks a lot like the 70s. It'll play out differently. But inflation, I think we're just in the early days of seeing that. And if you want to protect, look at the Canadian dollar. Not that that's a beacon of strength, but your cash sitting in your bank account is losing value every single day by this debasement. So where can you diversify and preserve your wealth? Gold has always been the answer.
I think nobody's buying the aliens in New Jersey story, because everyone knows if there was aliens, they would go to Canada, specifically Alberta or Saskatchewan, because that's where all the oil, gas, and uranium is, and all the rest is bonus.
We just welcome them right in, no problem.
Yeah, you're probably trying to finance off them, knowing you. But I'll why I asked that question, what is going to characterize 2025 game, is not kind of a macro bet. It was more of thinking about the junior space as a whole and what's driven 2024, if you will. And I've made a list of a couple of things. I think I tried to make him 10. Having hard times counting up to 10 these days, but I think there are 10 things that I want to go through. Maybe we can go through all of them. Things that caught my eye, things that made 2024 what it was for the junior market, and then you can tell me if it's underrated or overrated. So this is kind of cliche, underrated or overrated, but it is a good point to talk about what, what 2024 really meant. And can't really talk 2024 if you're not talking AI. I think AI, well, came to my radar a couple of years ago, but I ignored it completely, obviously to my own detriment. And 2024 is really where I started paying more attention to AI, but also our sector as a whole. I mean, machine learning and exploration and other tools for targeting mineralization using advanced data analytics, if you will. And James, let's start with you because you're the geologist here. AI in exploration, underrated or overrated?
Overrated.
Hmm.
Absolutely. No, because I think nothing will beat the human mind. I think AI is too data driven and doesn't have that ability to think outside the box. It's based on a number of parameters that even if you don't put the right parameters in, sorry, garbage in, garbage out.
Hmm.
That's data, that's math. And that's what AI is completely driven on. And the human mind can, yes, the human mind can also do garbage in, garbage out, but it can interpret a little bit more. And again, yeah, really think outside the box.
Very well summarized. Tony, what do you think?
Currently, very overrated. Find me a major deposit that got discovered because of AI. I can't think of one. Maybe you can. But I think in the future, underrated. I think things evolve. Obviously, AI is something you have to pay attention to, and you will eventually have deposits that get found by it. But we got to figure out what that AI technology is that helps find those deposits. So right now, I think it's a little bit overrated. It's that shiny new toy that people want to talk about because they don't have a deposit or drilling success. So they hope that they can get some bump from kind of the AI crowd. But right now it's not being utilized properly. Right now, like even at American Eagle's NAC project, like we need people to look at every single meter and figure out the lithology and the geology of our rocks. And you can't have a computer sit there and look at every meter of our core. So right now I don't think we're at the technology yet, and I can't think of any project that's been discovered by AI. So final answer, overrated.
Stephen, we've got two overrated. Do you want to be the contrarian of the group?
I love being contrarian, but I can't be on this one. It's totally overrated. It's a valuable tool, but it's nothing new. We've had algorithms and in this industry for and others for a long time. But it's got scary potential. But we're not there yet. Certainly not, in this industry. Sure, it can help edit my emails, but outside of that, it's not going to find your deposit. It's not going to log your rock. But it will get there. But I think it's going to have its 1999 pets.com moment. So I think the whole AI industry is going to have to be burned down, and then we're going to have to build it back up to figure out its utility and where it fits. So it's probably this may prove a laughable quote, but probably 5-10 years ago from now until it really becomes integral and does become underrated. So the potential's there, but in terms of it moving the needle for a junior or mining companies, in the sense that everybody thinks it will right now, completely not.
Steve's trying to say it's 5 years away from being 5 years away, and we need John Connor and Skynet to help us make this discovery.
There's definitely.
I hope I haven't offended our future overlords.
There's definitely going to be a comment saying these guys would have been shorting the internet in 1995, and but to a certain extent, I understand obviously what you're saying. It's a very interesting space to look at. I've done a couple of interviews over the year on it. I obviously still don't have my head wrapped around it, but that's kind of the general consensus. Is the data still matters, and then I'll follow up on that in 2025. I have an interesting interview plan for it. But next up, keeping up the pace. Critical minerals gold rush is what I've written down, where we saw some juniors obviously pivoting to anything carrying that title and going for government incentive packages and so on. But is that critical minerals label in the first place? And juniors has rushed to explore for anything labeled that overrated or underrated. Stephen, I'm starting with you.
Overrated. First of all, they're all critical minerals. I think it's, asinine to exclude gold, as if it's not a critical mineral. It's as critical to the economy as any metal. And the economy is probably the most critical aspect of anything. So first of all, they're all critical. Second of all, it's just a marketing buzz that this industry does such a wonderful job at banding around and thumping the drum. I think the government, has added to that by adding a special mineral tax credits, to critical minerals, which I'm not complaining about. They're great, but honestly, they should be for all metals. I think it's too arbitrary for any one person to select this versus that. We're digging for dollars from an economic standpoint, and we need the complete suite of metals to live our way of life.
James, I have a feeling you might disagree with that because uranium, I would assume you deem uranium more critical than gold, for example. So, but what's your take?
I actually agree 100% with Steven, almost verbatim. I think that whole thing's overrated. It's greenwashing. And that's just the way it is. Yes, we need every single metal out there. They're all critical metals. Funny enough, Canada in their first critical mineral strategy didn't include uranium. What kind of oversight do you guys have there? Way to catch that one, guys. But yeah, uranium is definitely critical mineral. It's energy supply in the future. But does it have to be deemed this whole magical critical mineral across the globe? No, it's always going to be necessary. Nuclear energy is always going to be necessary.
Tony, copper is kind of the poster child of critical minerals, rightfully so, my opinion. What do you make of it?
Well, I'll be a contrarian, like high level. I agree with what Steve and James are saying, but I think it's kind of underrated given the fact that how much we've talked about our balance sheet, your cost of capital, being able to put your meters in the ground and make that discovery. If I'm running a junior company or starting one from fresh, you probably focus on critical metal because, quite frankly, you get the rebates from the government. So you get rebates back, in BC for American Eagle. We get 30% of every dollar we spend in the ground back in our bank account. So it allows us to spend, about 30% more. So I think we're underrating critical metals because we're underrating how valuable cash is and how hard it is for us to obtain it. So I think it's really important. But high level, I agree with what Steve's saying. Everything should be a critical metal, but you got to play in the sandbox you're given with and deal with your cards. And right now, I think those critical metals the government say are critical and they're giving us tax subsidies back for is the ones you got to focus on.
This next one that I have up on here, I initially had written down as asteroid mining, but I thought that's way too silly and that's not really giving anyone any chance here. But so
honestly, I'll touch on that. Like honestly, like people talk about Musk talks about living on Mars, right? Right?
Sure.
We are the second biggest country in the world, and we have 35 million people living in us. Less than 10 times less than what the US has. Stop focusing on Mars and start figuring out a way to live in the Arctic. Because the last time I checked, I think it's easier to live in the Arctic than it is on the red planet. So to think you can start mining on an asteroid is absolutely ridiculous. There's tons of places on Earth we can still mine. They're mining the ocean, which I don't necessarily condone, but it's crazy.
It's easier to get into space than it is to go deep sea, which is oddly enough. So I would actually say I'm for asteroid mining. I think it's a freaking wonderful idea. But are we going to see it? Are we going to see it?
Explore, James, if we can't even get the money to explore something in Canada,
no.
how do you get the money to explore something on a moving object 50,000 miles away?
Governments just keep printing out money.
Yeah, I was gonna say, James, that's not fair to ask you because you have the Falcon from Star Wars on your wall back at home, and I've never been to your home, by the way, just for people not getting any weird ideas I've seen on in interviews. But so you're a little biased there, I'd say.
I've actually conceptualized how to bring an asteroid down to space. You just need a large enough
Of course,
ship.
you have.
Yeah, you just need a large enough ship to match the speed of the asteroid coming across. It has a big open bay. You come in, close it down, and bring it back to the gravity of the ship, and you start to slow everything down. You bring that right back down to the Earth.
Antonio,
so whoever's watching this has trillions and billions of dollars. There you go. There's your idea.
Antonio's great. Antonio, it's funny you brought up Star Wars. The kids are off now, so I was with them at Walmart today buying a doggy toy for a neighbor's dog, and they picked out Yoda, and I thought of James. So it's funny you brought up Star Wars today on this interview.
I can see the similarities there, but it's a little bit of a cheap shot. Why I brought up asteroid mining in the first place was actually because I wanted to talk about deep sea, and I was going to say the same thing. Wouldn't it make sense to go more deep sea mining? And we've seen a couple of companies trying it, where essentially they're pitching it as, oh, we're just going in there, picking it off the seafloor, bringing it up, processing it. So overrated or underrated? And James, because you touched upon it first, you can go first.
I'm going to say it's overrated. just because I think that I think it is harder than what they actually achieve. But honestly, I think it's overrated more so because of the ESG profile of it. I just think that there are a lot of environmentalists who are getting behind the cause that anything you touch on the deep sea floor now is affecting wildlife, and that really hinders a lot of progress in our junior mining space. We've seen a single flower, halt America's largest lithium operation. It's That's ESG for you, and that's the world that we live in. So yeah, I think deep sea mining is overrated.
Stephen, you can go as the realist.
I think it's underrated. The potential there is incredible. The ocean covers what, 70% of the Earth's surface, and we know nothing about it. On the whole, what we do know is there's huge amounts of mineral deposits down there. Now, would I invest in it? No way. Just because of what James says, the environmental movement in this world is founded, but has gone too far, and it's just totally handcuffed industry from moving forward. So I don't think that's a battle you want to fight. Now, look, I'm all for preserving the environment and clean water, fresh air for our children, 100%. But we have to look at all options, and the thesis that we'd look to an asteroid before we look beneath our feet doesn't really make much sense to me. But look, wouldn't put a penny into it either.
Look, Baselode's thesis is all based on water in the Athabasca Basin. The water pressure that exists in the Athabasca Basin is the same water pressure that exists in the ocean. And if it's difficult to mine uranium in the Athabasca Basin because the water pressure is going to be the same thing in the ocean.
It's an interesting point that I'd never considered. Tony, what about you? Have you considered that? No, I'm kidding. But what about deep sea mining? What do you think?
I wouldn't even consider it. You got to draw a line somewhere. I think there's enough deposits we haven't discovered, on land that we can still get a lot of value out of. I got kids, you read them books. I don't think we know enough about how to kind of keep the environment safe by mining in the water. We're just starting to understand that for mining on the Earth. So I wouldn't support some sort of Wild West exploration, because guess what? Exploration turns into mining, and I just don't support it at all. That's where I put my line in the sand.
Arctic, totally fine. Underwater, not going there. Got it. That's a good framework to work with. One of the reasons why this was an argument in the first place, though, and this kind of brings me to the next thing in the overrated, underrated list, which is jurisdictions. So I've got a couple of them to go through. But the argument is kind of that everything that's in tier 1 jurisdictions, Nevada, Canada, wherever it might be, has the early signs of a discovery, has already been looked at many times over. It's been found not too much of an opportunity there. And then the stuff that's remained underexplored, even though it may have the early characteristics of a discovery, has been left that way because it's in challenging jurisdictions, like West Africa being on top of that list when thinking of 2024, because it was talked about this year with all the issues there a lot in the media, right? And this might actually get interesting because I know there's an obvious bias with one of the companies in the OR group operating there, and fair disclaimer, honest confession at my end, that's going to be a bias on my side as well, as I also have exposure to West Africa by owning Awali Resources, which is the company that I was referring to. But yes, West Africa and the issues there. How do you perceive everything? Overrated, underrated as a jurisdiction? Stephen, you can kick it off.
And specifically, we talk about West Africa or just in general?
West Africa.
West Africa is just extremely important and scary what's going on there. And you do reference that Cote d'Ivoire is a wonderful place to do. It's the best of the West in Africa right now. But 15 years ago, that wasn't the case. 15 years ago, Mali and Burkina were the places, and now it's Cote d'Ivoire, and I expect Cote d'Ivoire to be safe and stable and to continue on that trajectory until it doesn't. That's the way it works. And so I think Africa, you referenced Africa being it's a place where elephants roam, and there's elephants that have yet to be discovered in situ. It's a wonderful place for that sort of thing. It carries all sorts of risks, but show me a place that's safe. Canada's not safe right now. I mean, define risk. There's just the risks are just different. For me, where I draw the line, it's where either myself or somebody I have to send there, their personal physical safety is at question, and then it's a hard no. So that's kind of how I define it. West Africa, you guess you have 10-year risk, and it could have a coup, and it could be gone tomorrow or other. Here, it's permitting risk and your ability to extract it, gain social license. But if I have to send somebody in there at risk of kidnapping or worse, forget it.
And we'll definitely talk about Canada because I want to do North America as a whole. But James, what about you? You've operated your entire career essentially, if I'm not mistaken, was in Canada. What do you think of West Africa as a jurisdiction, or the idea of it? Again, understanding that you don't have too much experience. What's kind of your gut feeling?
Safe. It's I wouldn't go there. I've never had any desire to go there. And I think what's happening in Niger with the uranium space is just, I think it emphasizes what is the possibility of West Africa, that you never know what's going to happen from one day to the next. I'll just cut it there.
Tony, what about you? You've again also North America, as far as I understand, is it was where majority of your career has been. But what's your gut feeling telling you?
It was in West Africa or Africa in general?
West Africa. So yeah, specific because it's been in the news a lot, and Africa is also just too big of a place to. West Africa probably too big of a place to talk about under one umbrella. But yeah,
Yeah, look, I worked at IM Gold for a while, and Mali was a really tough jurisdiction, and we had Sadiola there. And obviously, your value for their asset went down because people were risk adverse to Mali. But we had operations in Quebec, and I think they went on strike 5 or 6 times during the 10 years I was there. A lot of disrupted production. Mali, for what everyone says about it, where they had Sadiola, they never had one break of production for the entire 10 years I was there. So they were getting cash flow there. It was friendly to work with. I think it's a good place if you have a person there that understands the country. Obviously, Awali, which I'm on the board for, which is public information. Andrew Chubb's worked there his whole career. He understands it. I think it's a really great place to work. But you can be in a different part of the country. Like for example, in Burkina Faso, the Northwest is completely different than the Southeast.
Hmm.
And look at Kinross, for example. Not to get off on a tangent, but everyone always poo-poos Mauritania and Kinross's redback assets. What are they called? Tasiast and the other one. What I heard, I talked to someone recently, and they said the safest West African countries are actually the ones that are essentially run by Islam governments, Muslim governments, as opposed to like French regimes, because the terrorists, people like that, the extremists, they're not going to go and kind of blow up Mauritania because they're run by their own regimes, as opposed to Burkina Faso and other countries that are run by the French regimes. So a lot of those ones that you think are actually more risky actually are less risky. And something else that I learned about West Africa is that Ivory Coast probably is the best country to be in that entire area. Completely forward thinking, great place to visit. For me, as someone that's going to run a company, I would never invest in marketing that I don't use myself on a day-to-day basis, and I would never be involved in a country that I would never be allowed to visit by my wife. My wife's very easygoing. I got a super long leash, as Steve knows firsthand. But when I had to go to Burkina Faso for IM Gold, she said, "I'll call your mother. We are not together. You are not going there because I don't want a dead father." But when I said I had to go to Ivory Coast, she said, "No problem." So that kind of gives you an idea of kind of how different the different regimes are based on where you are in that particular section of West Africa.
I want to talk about your neck of the woods, with that being, of course, Canada. So that's going to be part of it. But maybe let's talk about kind of the behemoths in North America. As far as I know, North America is actually 23 countries. So in most people's heads, it's really two. And in the smaller part of the population, maybe it's three, with that being Canada, US, and Mexico. But Canada, I mean, after what happened in the Yukon with Victoria Gold, and a lot of attention came into specifically the Yukon, but also Canada as a whole got a lot of attention from a political angle. I think you're up for elections soon, not necessarily because of what happened with Victoria and the Yukon, by the way, the attention going into Canada, but other mostly, again, political and ESG related things. But so as it stands today, permitting local ESG and everything taken into account, is Canada overrated or underrated as an exploration development jurisdiction? Stephen, actually, I'm going to let you speak last because you probably have the most to say. James, what do you think?
Underrated.
Yeah, I was leaning towards that way. I think Canada is underrated. We do have some permitting issues, but our assets are phenomenal. What we have undiscovered underneath the ground are great, and they do have to come out of the ground. So I do think that in the future we will have some governments that are a little bit more mining favorable. So it's underrated for now, and well, no, I will say underrated. Yeah.
Mm. Tony, you said underrated already. Why are you saying that? Specifically being in BC. BC's had a not too easy of a year. I mean, regularly, we touched upon that in our last interview on American Eagle specifically, but why do you say underrated?
Well, look, I'm going to touch it first. Like it's underrated because, quite frankly, what's the delay if you get permits? What, 2, 3 years in Canada? Well, if you're building a real mine, it's probably gonna be a 20, 30 year mine. So what does the difference really make in 2 or 3 years, in the whole of things? Especially when you know during those 30, 40 years that you're running a mine, it's not gonna be taken away from you. So I'd rather have an extra 3 years of permitting than be worried during that 40 years when I'm producing, I'm gonna lose it. Look no further than First Quantum and Franco Nevada's project in Panama, which by the way was considered like the first world country in like the third world region of Central and South America as well. Like, look, I talked about people doing their homework. Like, how many different First Nations groups do you think there are in Canada, Antonio, from someone from Europe?
500?
Yeah, there's over 600. That's pretty close. Now, how many do you think are just in BC?
100?
Yeah, there's over 200. So one-third of the First Nations groups are actually in British Columbia. Now,
Mm.
it doesn't matter if you're liberal, conservative, NDP, bless your heart. It just matters what different First Nations group you are in within that province. If you have a good relationship with them, they're the ones that actually run what's going on. So I think you got to look at everything, by the basis of where that particular mine is located and see how the relationship is with the community. So I think for American Eagle, we're in a very good position. But I think the problem is when people look at Canada, second biggest country in the world, they brush it with one big stroke, and they look at provinces, they brush it with one big stroke. But a lot of the times, it's not even anti-mining; it's anti-people, it's anti-assholes running those particular mines. And in the end, it's not really easy. It's not really hard to figure it out. It's all about communication, honesty, letting people under the tent, letting the First Nations know what you're doing, same as you do with investors. And if you start small at the very beginning, eventually you become a mine, you'll have a really good path forward. And that's what we're kind of focusing here. But when people say Canada is not a great place, it's crazy to me. I'd rather be in Canada than any other country in the world. I know the languages, I know the laws, I know the politics, and if there's any sort of challenges, I'm pretty sure I'm in the best position to find that solution. And the one thing I know, it's a lot harder to figure out the soft issues than the hard issues. And the hard issues are the geology. There's a lot of geology to figure out in Canada. There's a lot of opportunities. Cote Gold, Artemis, Marathon's Victoria project, or whatever it's called, Valentine project. There's a lot of projects still being discovered. Look at PMET's, battery metal project in Quebec. So I think Canada is still very underexplored at the time being.
Mm. Would you have had the same opinion if you were doing this interview from your position in I Am Gold a couple of years ago? Like, would you have said the same things, or is it because you're now operating with American Eagle that's driving that answer?
I Am Gold had an amazing relationship with that's where I learned a lot of my foundation of how to work with the First Nations. Like Steve Letwin, another Steve in my life, ran I Am Gold. Like he was friends with both the leaders that were involved in the Cote project and Go Gamma. He was friends with them. He started at the very bottom, and we never had an issue with the First Nations of Canada at I Am Gold, and we never had issues with the locals in West Africa. Say what you want about I Am Gold, they've done really well recently. They had a rough patch, but their community relations, the way they treated their communities, was second to none. So, I probably have the same opinion of Canada, 10 years ago that I have right now.
Hmm. Stephen, now it's up to you. I know you have a lot to say. Overrated, underrated?
Probably need. I just say it's overlooked, and for good reason. For the last, call it 10 more, 15 years, we've made a progression of poor policy decisions that have led to us to be, I don't want to say uninvestable, far from it, but considered to be a high risk jurisdiction. Now, again, it's not about losing. That's what you say. Oh, well, we're never going to lose it. It's kind of true, but maybe you can't use it. It's kind of true, and you can't develop it. So I think we've been overlooked accordingly because money flows to the path of least resistance, and it'll flow to Cote d'Ivoire or where it can get its return. However, the good news is we're going to come back because we have to. It's just what's right, what makes sense, and over a long enough period of time, what makes sense prevails. We've got everything. We've got this mineral endowment. We are a huge country, the second biggest land mass in the world. Probably on a density basis, I think maybe we're maybe less dense than Mongolia. Other than that, we have this totally unused land that is just ripe for resource development done well. And I think if we can get away from being pigeonholed about how mining used to be done 100 years ago, even 50, 20 years ago, and that you can mine something responsibly and then reclaim the site as if you never knew it was there in the first place. That's how it's done these days, with money that is in the bank, so that if the company goes belly up, the taxpayer is not on the hook. So I do think mining in Canada is coming back. I do think that the premium for having assets in Canada has vanished, but that premium is going to come back. So we're really going to get back not only to security, to safety, or call it tenure, but also to have metal on the continent. I think that is going to be really, really important. Metal that can serve the United States of America, which I think is going to be the biggest consumer of metals over the next 10 to 20 years. So if you can have assets that feed that beast, even better.
Canada is actually the 8th least densely populated country in the world. I think Mongolia.
I saw you cheating though.
Yeah, I'm looking that up as we go.
Can I add something to Steve though? I think when he's talking about what's attractive, in terms of junior companies, yeah, it's probably on the same level as countries in Africa or South America. But in terms of companies that are bringing mines online, like that's the most attractive thing. They're past that permitting, and they get a big bump in their PNAV. Like look at Artemis, look at those other, you know, Caliber that's bringing the Marathon property online. I think there's a big premium, and like you're gonna see it soon in the M&A from the big miners going to buy those other guys that are in Canada because they're not stupid. They know if they're going to bring a mine on for 30 years, it's going to be producing. No one's going to take it away. It's just a challenge of bringing it online. That's the challenge.
I actually looked up Belgium's population density too, and now I'm kind of scared because apparently it's 10 times that of Canada. Canada, it says here 4.2 people per square kilometer. That's kind of crazy to think. We have 380 people. So for every person you guys come across, well, not in Toronto, I suppose, but for every person you come across, I come across 10. So for every 10, I come across 100, and then you start snowballing, and I'm going to get anxiety if we keep
You haven't
going.
been out to Saskatchewan yet.
I think half the country lives within the Golden Horseshoe of Ontario.
Yeah, probably.
And even more within, 80 kilometers of the border of the US. So, I mean, it's all just sort of, it's hyper concentrated too along, the 49th parallel or whatever it's called when you get past the Great Lakes in the east. So Toronto is very well populated, but you go to the north, it's very sparse, very.
That's the information I come here for. That's it's a good tidbit there. US way more densely populated, of course, and that is next up on my list. They're gonna have a new president in a couple of days. Overrated or underrated, specifically as an exploration and development jurisdiction?
Geez. Is the US overrated as an exploration jurisdiction? Well, the US, as of late has been under the same, call it regime as Canada in terms of permitting. You've got, was it Resolution, world-class mine? I mean, it's got its challenges because it's deep, but huge. It's been discovered 30 years ago. Pebble, same thing. So, the US has been overlooked for good reason, put it that way. And I'll leave it there.
Okay. Tony, what do you think?
I don't know. I don't like to talk US politics very often, but I think, I think actions speak louder than words. So can you get Pebble over the line? Can you get some of these other projects over the line in the US? I think that will show a lot. I also referred like the pulp and paper tariffs that we have on our Canadian products versus our US products. So even though the US is taking a lot more of these metals, are we going to be able to ship them at the same prices than, the prices that, these US new mines are going to be coming online? I think that's a big question. But I think if we want ESG friendly product, we got to start realizing if you affect the ozone layer in Indonesia, it's going to affect you over in North America. And nobody wants to see how their sausage is made, but you're better having oversight from Western world countries as opposed to countries like Indonesia that don't care if you're hurting dolphins or particularly eating dolphins, etc. So I think it's a big flight of capital going away from the West, going to the East. I think we got to bring it back to the West. So if it's creating jobs and we're able to give it oversight, I think a lot of people should start focusing on helping us permit and helping us build over here in the Western world. It's the only way you're going to create jobs. It's been a big boon for us recently at NAC because you go to NAC, you got the best fertilizer is the footsteps of the farmer. So it's not until you actually go to NAC that you realize how valuable metals and mining is, because you go there and you talk to the First Nations and the communities. Everyone's fleeing the communities because there are no jobs, there are no hospitals, there are no schools. And what do you need to create those? You need, you need an economy. And the pulp and paper industry is pretty much left BC. So what's left? It's metals and mining. So I think looking forward in the next 5 years, you'll be seeing a lot more support of metals and mining because that's really the only place you're going to create economic prosperity in interior BC, specifically where NAC is located.
James, you're the last one. Overrated, underrated?
New president in the US 2025, benefiting American mining, overrated, benefiting Canadian mining, underrated.
Okay.
I think
So
it's just simply because we've got the endowment. I think they're more reliant on us. It's harder to do exploration in the States than it is in Canada. People complain about Canadian permitting, but I think it's even worse down south. So
James, are you saying they'd rather have the mines in Canada and ship it down than worry about the permitting in the States?
no, I'm not saying I know I'm not saying that. I'm just saying that it's that they want, the whole homegrown American aspect. I think that's the mentality, and I think it's there, but I don't think it'll go as quick as possible. I've from my experience in the rare earth industry, the States have been a lot of bark with no bite. And they've promises, the same promises for 10 years down the road. So we're going to do this, we're going to do this, we're going to do this, and nothing ever develops. But in the on the mining side of things, it's Canada's easier to move, and they're gonna need supply.
So, in summary, 3 Canadians say that Canada is underrated and the US is overrated. In other news, French fries are not actually French, they're Belgian. Going even further down south, though, to Mexico. Mexico's been in the news a lot this year, open pit fears and whatnot and everything else, but cheap to operate in, right? Which is also part of my checklist. What do you guys make of Mexico? Overrated or underrated? And James, you can keep talking as you were just talking.
I think that's overrated. You can't beat an open pit. You just can't beat an open pit in the mining world. There's nothing better than that, regardless of grade. It's the best mining opportunity to move any commodity forward in today's world. We need commodities coming out the yin yang. It's yeah, I think it was the wrong decision on their part. Open pits can be done safely, and they're not really uh, environmentally impact. No, it's with modern reclamation and rules in place. There's a lot of good policies to reclaim things, and even companies that are, I guess, a lot of the projects or companies down in Mexico aren't even Mexican. Obviously, they're Canadian American, and they all follow Canadian policies really on reclamation and getting back to the ESG standards.
Yeah.
We have high levels to perform to in today's society, and I think a lot of companies bring those ideas down there. So getting rid of open pit mining in Mexico, not a good idea.
Stephen, you're someone who looks at assets all the time. Do Mexican assets cross your desk, and when they do, what are you thinking about the jurisdiction?
I pass on Mexico pretty quickly. You know, I'm not to say that I wouldn't go there, but it has to beat the returns available to us here in Canada, which is a very high bar. If Mexico gets rid of open pit mining, then they're not very serious about mining. Open mining is going to become more and more important, more and more prevalent, because these things are harder and harder to find, and we're getting better at mining lower grades because we have to. So yeah, look, I mean, I think that's just political posturing. And as I said, you want to be serious about mining, you need to be serious about open pit mining.
Tony, you're going to agree with the rest of the group?
I have no comments on Mexico besides I like Mexican food.
And tequila.
Love tequila.
Mexican food. I think I'm not going to comment on Mexican food. We just talked about fries. I'm going to start getting hungry. You've been at this for like an hour and a half, maybe even longer. Shorting was a big topic too this year. This is by no means an exhaustive list, by the way, but shorting or naked shorting or stuff like that, that I didn't pay too much attention to because it didn't grab me at first. And I mostly saw, obviously, issuers themselves complaining about the issuer or making arguments that naked short selling is actually the thing that is hurting the industry the most right now. What do you guys make of that whole topic? And Steven, it's up to you first.
Well, if it's the biggest problem with it's completely overrated if they think it's the biggest problem in the industry. It is not. Is it a problem? Certainly. Naked shorting is definitely something that leaves stocks available to abuse. There's no question about that. I'd love to see it mitigated in some capacity, but I'm all for shorting. It's a natural part of the industry and of any markets, the ability to bet against a company. But naked shorting is a whole different beast and should not be allowed.
Tony, is that something you think about more often?
Not really. You know, I'm just more worried about people just selling shares based on not understanding what the results are. You know, Terry Lynch from Power Nickel was the biggest advocate for naked shorting, and I think my counter has just come out with good results. And you know, Power Nickel came out with good results, and since then we haven't seen Terry Lynch talk about it at all. So I think it's something for people to lean on when their stock's going down. But you know, in the end, like Steven said, I think there's about 5 other things that are more important in the junior space than focusing on naked shorting, which we probably can't fix anyway. So as a CEO of the company, I'd rather focus on ways to improve my balance sheet and make sure the drill holes go in the very best spot possible.
That's again, I think that a lot of well, every opinion is really based on what recency bias, essentially, to put it in a couple of simple words. James, for you, that recency bias might be on the other end, where Baselode came off of the uranium ETF, and again, your stock hasn't done well. I think it's down 90% or something like that this year, which is, calling it not well is an understatement, of course. But do you think that's part of the problem? Short selling, is that something that you pay attention to in the volume, in the price, and all these things?
On a day-to-day basis, no, I don't actually pay attention to the volume or price. I'll agree with both Stephen and Tony with exactly what they said, but I'll also say that naked shorting is underrated. I think it does have to be mitigated and enforced. Can it be enforced? Probably not. I don't agree with naked shorting, and I think it has been a problem for baseload. Has it been the only problem? No, I don't think it has been. I think there's been the biggest problem, I think, for baseload. It's just been, that educational side of things, that people don't understand what we have or what we've accomplished. So naked shorting, probably not the only cause, but I think it has been a variable within the equation.
Right. Look, naked shorting can really work well for a company too. If you got great drill results and people are naked shorting you, like, they're gonna have to cover it. It just exponentially causes your stock to go up a lot further. The problem is the results coming out for these companies isn't asymmetrical. So the probability of you actually having, negative results is better than the probability of you having positive results. So the naked shorting actually works out more than it doesn't. But for a company that's going to have good results come out, it can actually work a lot in your benefit. And look no further than our company, from the summer until recently. I saw a lot of shorts out there, and I was happy to see them because I knew a 10% gain would turn into a 20% gain.
Well, and part of that is because people want better financing opportunities. And again, we go back to the beginning of what we were discussing. And this actually might be a good point to talk about. One thing that I only had it as an aside. I was not sure whether we should or not, or shouldn't talk about it, because I think we might actually see more of it in 2025 than what we did in 2024. And that is the tokenized ownership and blockchain mining, if that's how you would say it, where essentially we've seen a few attempts at integrating blockchain technologies into project funding. I think more people will try, but is that, and Stephen, you can start in this one because I know you're part of the financing, but overrated, underrated?
It's ridiculous.
Hmm.
I won't say anything more of that to offend anybody, but no, it has that I have zero interest in that.
James, we've seen a little bit. We're starting to see that in uranium too. Overrated, underrated?
Overrated. I think I don't think there's anything really to it. I don't understand cryptos enough and the whole tokenization of metals and things, to be honest. But I just don't see how it is, especially in the uranium space. Can't tokenize something that's opaque.
Tony, what about you? Would you buy tokenized copper?
I wouldn't buy tokenized copper, but I think it's underrated in the fact that you look at Bitcoin, you got to leverage the infrastructure that Bitcoin has in the blockchain to it's all about supply and demand for your metals. And if you look at the average, for every ounce of gold that is produced, it's traded probably 500, probably more times. So if there's a way to actually have that gold and track the provenance and keep it where it is without it getting like cut up and resold. Imagine you had gold and someone's like trading and selling it like 500 times. Like that's your gold. Why should someone else leverage off you if it's in your bank account? So if you can somewhat leverage blockchain technology to affect the supply curve, that means that metal is going to go up. So I think in that aspect, it's super underrated. To see if we worked on a project like that years ago. So yeah, that's my personal opinion of it. I think there's a lot of
It's just the
opportunity.
securitization, but like it's the securitization of a commodity. But like, especially if, if it's one thing, if it's a physical commodity stored and warehoused in a, safe, secure spot that's verified and audited is one thing. If you're gonna, securitize an in situ 43101 pound or ounce, all it does is just open the door to a whole can of, scams, guaranteed.
But these big companies are like, they want nickel to be safe. Well, the blockchain technology allows you to actually track, is it coming from Canada or is it coming from Indonesia where, they're putting all their tailings into the ocean? And if people actually care, they'd actually use blockchain to track the provenance and actually start buying the metals that are actually coming from, North America, which would cause a difference of the price, which would actually be really beneficial to, North American projects like American Eagle Gold, Baseload, and all of Stephen's other projects. So I think parts of blockchain infrastructure would really help us out. But yeah, I agree with Stephen. No,
But like I have no problem with like understanding the provenance of any one particular metal. I think that's very important. However, I just don't think blockchain is necessarily the answer to that. If it's a metal anode, I mean, you just melt it down. I mean, like how does there's lots of ways to gain that system. But anyways, look, we don't want to go down on the rabbit hole on this one. It's a separate, what I was talking about to me just lends the opportunity to give our industry a bad name. So I'm totally anti that.
If you want to start tokenizing in situ metal, you probably don't have a project that would ever be developed anyway, which means it's worth zero. So,
well, here you're breaking my dreams into wanting to tokenize resource talks into 2025. I thought you'd all buy that token. I'm just going to scrap it off the list and just err on the side of caution here. Little summary: AI, you voted it overrated. Critical mineral labels, you voted it overrated. Deep sea, overrated from an investment perspective, although there was different opinions on that. West Africa, mostly overrated, depends on the jurisdiction. Mexico, overrated if they go through with the open pit thing, which again doesn't necessarily seem like they're going to. Canada, obviously you rated that as underrated. USA, overrated. Shorting, or well, the topic of shorting, the way it's being covered, overrated. Tokenized stuff, mostly overrated from Tony's argument, as you just pointed out. I'm not going to repeat the entire thing because probably I can't, but it was mostly overrated. And then there's a bonus one at the end. This is 9 actually, if I could count it well, but it's a bit more open-ended, or if you want to be fair about it, it's basically just me being lazy because I'll let you pick it. Tell me something you noticed in the market this year that you thought was overrated, and tell me something that you noticed this year that you thought was good but didn't get much attention, therefore is underrated. And Tony, we can start with you.
My brain's fried. I can't come up with anything.
Why not?
Because we just went
You've
through
been
8
talking
of
to
them.
me for too long. I
I
get it.
even came up with all the ones I would have talked about.
Good. What about is can someone come up with it? Maybe we can come up with it as a group. Let's put the pressure lower. Stephen, what do you think?
Oh, geez, I'm on the spot. We just ran through the best, the 8 ones. Okay, so look, what's one? Okay, the ASX. Let's talk about that. I get a lot of inquiries and suggestions that we go and list our projects on the ASX. The ASX has been a much better, more robust market over the past 2 years. I think they have better regulations on a number of things we won't get into. But look, it's been a better market. I think Australia is kind of like Vancouver. You go to Vancouver and you go in the Starbucks, everybody's talking about mining. I think Australia is sort of by extension that, whereas Toronto is much more diversified. But I guess they just have a better market. If you can list copper in Australia, everybody's like, oh, well, you'll get a better valuation. I think that has been true. But now, again, going back to my comment on Canada being underrated, I think that arbitrage is going to shrink. And I think the TSX is going to catch up. And I think the AS, it's going to be arbed out. It's as simple as that. So Australia has been a better market the last few years. And I think the pendulum's going to swing.
I just thought of something.
Go ahead.
Thanks, Steve, for getting my creative juices going. I think it's overrated how important some of these, conferences are that these people like me have to go to. I think the old way of thinking is you got to look people in the eye, but I think it's all about eyeballs and whether that's in person or online. I think the online thing's more important because you hit more people, and that's why we do things like this, Antonio. Like I'm starting to get in the mindset that I only invest in marketing services that I actually use. And I'm not seeing a lot of value from these, in-person marketing meetings. And I'm seeing a lot more value from these things that are online with you, stuff like Robertson, etc. And any in-person conference I have to go to spend money on, the number one rule I'm now going to follow is unless there's a video attached where I'm doing a presentation, I'm not going. Because I might have, maybe I will have a bunch of good meetings, but maybe my 10 meetings won't be good. But at least I have a bit of material that I can then go use and share with the internet. So I think that's one thing that people maybe aren't looking at right now. I think a lot of the in-person marketing is overrated and things that are online are underrated. I think another thing that is underrated significantly, which has been spoken to about for a while, is cash. Cash is king. And I think when investors look at a company, the very first thing you should look at is how much cash they have. And you look, Baselode, XXIX, American Eagle Gold, all 3 companies have a very strong balance sheet. But I wouldn't look at any other company that didn't have financing for the year following this year.
I think this is what is underrated is Tony's ability to work in American Eagle's cash balance into every answer. Kudos to you, Tony. Well done.
I was just gonna say the same thing. Like you sound like someone who's got a lot of cash right now. James, you've been silent. Don't think we'll forget you. Overrated, underrated. What have you noticed? And specifically from your angle of the uranium junior universe, or well, something else, whatever you can think of.
Actually, I was going to do a double uranium and gold, but
Okay.
one of the things that it's a repeat thing throughout time. But one thing that's always overrated when there's a rush in the commodity, which we were talking about earlier on the gold side of things, you get a lot of these zombie projects that are revived that didn't go anywhere in the last cycle and didn't go anywhere in the cycle before that, and they just keep getting revived and revived. And I think that takes away capital from companies who have serious projects, who have something deliverable to the market. And I think so in a situation, baseload's completely underrated, in my honest opinion. We don't have a zombie project. It's completely brand new, and it has all of the all of the aspects to move forward and become something quite lucrative. That, will that narrative continue forever? Zombie projects, of course. Do we have to look at quality projects? Yes, that's always key, and we've talked about it before in this. You're looking at management, you're looking at cash flow, you're looking at balance, you're looking at the ability for a company to avoid dilution, do what's best for your shareholders, and I think that is completely underrated in the investment community.
That's well said.
I've got another one here, and this sort of lends back to critical minerals. Not really, but it has to do with about retail investors should stay away from vanadium, germanium, manganese, antimony, etc. Stick to gold, copper, uranium, anything that's traded on the London Metals Exchange or a major metals exchange. Not that uranium is, but uranium will be an exception. But these niche, let's just call them the niche commodities, are so difficult to understand. And they are hot and cold real fast. And they are the flavors of the day. And the promoters of the world get involved and they change their name of their company to this, that, and the other. So like, can you make money there? Sure you can. Are there good people doing it? Sure. Are there great projects? Sure. But they're few and far between in these very niche metals. Retail, and this is general. Some people understand it, but the vast majority of retail, they listen to one of your phenomenal interviews, Antonio, and they feel they're educated on the needs of antimony or the antimony market, but they haven't a clue. And so I think that this business is risky enough to try and find a gold or a copper deposit, but at least that market is deep, transparent, and very, very large. So I think my takeaway tip for retail investors, there are exceptions to the rule, but to stick to the major commodities and forget the temptations of the flavor of the day or the year.
Actually, I want to touch on that too, because Stephen said it right there with one simple word. It's niche. And those commodities are completely niche commodities, not just on the market side. Well, on the whole supply side, they've got a very tight window. And so no matter how good your project is, you have to bring your product. If you've got a project that can go into a mine, you have to be able to make sure that your mine has a place, your product, sorry, your mined product has a place to go once it is pulled out of the ground. And that is very hard for certain commodities because there's X number of mines that have all of that supply already locked up. Vanadium is a very tough market to get into because that supply or the demand, I guess, is very limited with already oversupply. And there are a few other commodities that are like that. And if you can't find a home for your product, it's never going to come out of the ground.
That's a fair point. And we're going on, we're over an hour and a half. I wish I had my phone on me here, but we're going on probably over an hour and a half at this point. We're probably going on close to 2 hours at this point. We've lost Tony's camera even, so he's probably gotten tired of listening to us. There's probably plenty for everyone still listening, although I could keep talking for at least another 2 hours. But final comments. What am I forgetting to ask you that you think is important? What did you come here hoping to talk about that I failed to bring up? Stephen, you can go first.
No, look, I think to sum it all up, I mean, I'm speaking to retail investors here. I think is the large part of your audience is look. I've said a lot about it's a wonderful time to invest in 2024, which I think it is. What I emphasize is that you need patience because I think many of the themes that we're talking about today here will hold true. The only thing we don't know is when. If you invest a small percentage of your portfolio, only that which you can afford to lose. If you trust and do your due diligence and know who is good and who is not, I do think, I will say that I think there are phenomenal investments to be made. And not just in the OR group, I'm not talking my book, but if you can sort of pick good quality assets with cash balances run by good people in good jurisdictions and just sort of set it and forget it, to use that Ronco thing. Antonio, it's probably too old for you, but set it and forget it. And then, come back in 2 or 3 years' time. And I think the returns could be spectacular. I do think we're due. I don't think we're there yet, but we're getting closer. And I'm just going to keep my head down, focus on owning assets. Again, that's one of our core principles at the OR Group, is to own our assets so that when the good times do come back, you're in the game. So look, I think there's been a lot of tidbits here, a lot of talk, a lot of yammering, but some really good tidbits. And I thank you, Antonio. You've done such a great job at developing your channel over the past number of years, and I think you do a great service to investors here in delivering honesty and integrity, and that's why I'm a big fan of your show. So thank you.
Well, thank you for saying that. I really appreciate it. Tony, I can, and James, I'll give you the chance to do that as well. What do you, I don't know if you heard that, Tony, because your camera kind of fell off there for a second, but anything you come here, did you come here hoping to talk about something that I failed to bring up, or what's the final takeaway for you?
I think I plugged American Eagle Gold enough. Yeah, stick by your guns. 2025 is going to be an exciting year. Stick with the companies that are in a safe jurisdiction. People that you believe will steward your capital well, and have a good location where they can actually come up with great results. But I always tell people, and I'll refer for James, a little Star Wars nuance. What did they put Han Solo in, James? Was it
Carbonite? He was frozen in carbonite.
What I tell investors: we'll treat you like Han Solo, put you in carbonite, wake you up in 2 years, and I think you'll be happy with the results. But on the way, it's not going to be linear. But look, we took you 30x in 2 years, and I don't think it'll be too hard to take you another 10x. But have some faith in the recipe that we kind of came up with.
Yeah, it's more like cryo sleep, or more like cry sleep. I don't know if that's going to land.
One of the first
James,
times I cried seeing
Cry
Han
to
Solo
sleep.
putting that.
Yeah,
Cry
James,
to
what do you
sleep.
make of it? What did you come here hoping to talk about that I failed to bring up?
Well, honestly, I'm glad we didn't talk too much about baseload. I think that is a discussion for another day. And I think Stephen and Tony covered a lot of good summary points there. And I'll just reiterate my first answer to your first question, just misunderstood. I think there are a lot of things out there that are completely misunderstood, and people don't educate themselves properly to find what's good and what's valuable. You look at the OR Group, serially successful companies have all made significant returns for shareholders, and have serious cash in the bank for 2025. So it looks great for a number of companies within that OR Group umbrella, and continue to deliver on results.
We definitely have to catch up on each one of your companies, Stephen. For ORECAP, it's been too long. We need to do an update, see what's happening. There's a lot of questions coming from the community as well. James, definitely on your end, it's overdue. And Tony, we just did one, but I know you like talking about it, so we'll do another one soon. Anyways, and thank you, gentlemen, for investing so much time in me today, and thank you for the support of Resource Talks.
Thanks, Tony.
Victoria.
Antonio, you got an awesome product. Keep it up, man.